I have not uploaded a video in like 8 days. Been extremely busy in my personal life, so I'm gonna get through this really rather quickly. I was actually asked. Well, I wasn't asked. I was brought into a situation in which a particular stock, which I'm going to talk about in pretty good detail, was brought to my attention by a person that I care for a lot, and I'm not going to mention that because that's personal information, and I don't want anybody knowing who they are for their own protection. So, real quick, risk disclosure statement. I've showed this a million times, and I will always show it to you every single time before we watch a video because I'm not a financial advisor, so you can't sue me or anything like that. If you push a button, that's on you if you push the button, so you assume that risk on your own. As always, just pause the video and read that over. So the stock that I've actually analyzed is Qualcomm. So I'm going to take this Fibonacci tool and narrow it down to the bodies of the candle. So this is a monthly chart. We have a new energetic price run from this low to this high. I really prefer to use the bodies just because it's just a monthly time frame. I just like it. Doesn't mean that you have to. It's just, in a way, I feel ICT has taught me specifically and a lot of other students to kind of narrow it down to the bodies. There's lots of videos that he's made. I mean, you don't need to watch all these videos to be profitable. There's tons of models that work that will make you profitable. It's not guaranteed, but there are profitable models. I've seen them over and over again. So basically, to start this off, we're looking for a monthly PD array to be hit. So we're looking for discount arrays. So basically what I mean by that is we take our fib to the high, right here, to the low, and then we get premium right under the 50%. Obviously we've gotten that. Where's the fair value gap below the 50%? Like, where's premium? Right here. There's a fair value gap right here. I'm actually going to snap this one. This is a weekly fair value gap that I put it on. I'll just leave it on a monthly because that's more dominant. So what you have here is, well, your first signature is the shift in market structure. So there's your 2022 model. Change in the state of delivery of price when it takes out the short-term high right here. Why is this a short-term high? Because I hate when my mouse does that. Sorry. Let me zoom in here. Be really specific with this. So this short-term high right here is a short-term high because there's a candle to the left right here, and there's a candle to the right that is lower than this candle's high, and this one is also lower than this candle's high. So a lower high to the left, a lower high to the right, and the high in between, that's your short-term high. Once that gets taken out, boom, you have the change in the state of delivery. Obviously, this is a monthly time frame, so it takes a while for it to actually give you an opportunity to get long. And that's what we're seeing right here, and that's quite beautiful. So if you look right here at the premium, the discount in this area, where do you see a fair value gap or an imbalance or a buy side imbalance, sell side inefficiency? Right here, right? What does that mean? For the specific person that doesn't understand that I was referring to, what I mean by that is this candle right here opens down here, trades higher, closes up here. Next candle opens up right here. The wicks are part of the candle, but it rejects down there, opens up, trades lower, goes right back up above the opening price, and then opens, or not opens, it trades all the way up here, closes down right here, not down like the candle didn't close down like a down close candle, it just closed up here. Now we have this candle closing. This is 1 month of price action, one whole month right here. Each of these candles is 1 month because we're on a monthly chart, so it's 1 month at a time. So this next one opens up, passes right through this candle's high, and closes above it. It does not come back down and close in this inefficiency here. That's why it's a buy side imbalance, sell side inefficiency. It's a fair value gap that is a discount rate in which long term whoever is buying, it doesn't really matter to me, as that's just how I engage price. But this is a PD array in which anyone, bank, central bank, whatever, the algorithm is going to reprice down in there for a discount array. And it's going to pick up, excuse me, it's going to pick up long positions. So what happens is the market comes down in here, gives you an opportunity to get long. Yes, did it come back down and take those sell stops? Yes, but your stop would be below this candle's low or below, or like right here at the opening price. And you can actually narrow that down by using the analogy of the doll that fits inside the doll, and then the doll fits inside the other doll. So you can actually narrow this down into a smaller time frame and get a better entry. But I'm not going to get into that. So right now, that's all I can partake in and explain on the daily chart. Obviously, there's buy side resting above this old high right here, the short-term high. There's buy stops resting above that. Once we take out this immediate term high on a weekly chart, that's why I have it labeled as such. Once we take that out, that is a monthly shift in sentiment, meaning it's bullish. So once we get above this high, we're going above this high, and then ultimately we're going to get up into this particular area, and if we can get some acceleration through this breaker here, this breaker right here, I know that recently he had mentioned that price actually is more lean towards the beefy lower down close candle. So the one that has the lower body. So these two have a higher body, but these last down close candles are lower. So you would use this as your breaker. So more PD arrays. Kind of confuse the crap out of some of you, but most of you obviously will understand this. So I'm going to change this to green because I saw this. Really like it. It's a nice, decent look to it. So bring that, and we'll just call that breaker. It's a breaker because, let's wait a second. Actually, bring this all the way to the right. Because there's a high, a lower low, a higher high. I believe I said that correctly. So basically, it broke the retail stops. So the buy stops resting below this, or not the buy stops, the sell stops. The sell stops, it broke them. It broke all the traders that had their stops below this low. And it came back up in here before. It actually came back down and took out sell side right here, which is very interesting to see that. So that could have been like a trade to go short below this low if you were interested in that, but that's over with. So that's enough with the monthly chart. We'll get into the weekly chart. It's a lot more information. So this candle is low right here. That's how you narrow your fair value gap down a little bit. So this fair value gap right here, that can be narrowed down to this. Once it goes below this low, boom, there's your entry. It's like your institutional order flow entry, basically. And now we have more information to work with. So short-term highs right here, lower candle here, high in between. I'm gonna zoom this up. Yep, you can see. I mean, you probably would want to use these as your short-term high, or these candles highs, because they're higher than this one in particular. It's more of a 5-bar fractal in a way, but I would prefer to just use these. So this one, however, you don't have that situation. This candle's lower than this candle. This one right here, it's got a lower high. This candle has a higher high, and then this candle has a lower high. That makes that a short-term high. Now, what gets really interesting is we have an immediate term high. An immediate term high is a high with two short-term highs on both sides of it. Technically, you would go with this one as your short-term high because it's higher, and then this one. So that would be more refined. This would be your immediate term high. And then the short-term high to the right of it would be right here because it's the highest one. And then this one is also the highest one. So when we get an immediate term market structure shift, from my understanding, that means that automatically we're going for buy side above these highs. And they're really just nice and smooth. Well, they're not smooth, but I mean, they look like they have stops resting above them. They're just asking to get taken out. And we also have an imbalance right here. So I, in particular, have not studied enough to know if the imbalance just starts from this candle's high right here, where I have the red box, and then ends right here. I'm not sure if the imbalance in itself goes all the way up here. I personally don't think that that's going to hurt you, in my opinion. But I think that it's more along the lines of this. And then these candles right here, there's literally no body. So that's what I mean by a volume imbalance. There's no volume, no bar closing up here. It's just, it's imbalanced volume. It needs to have volume, like trading volume up there. And that's why it's imbalanced. So once we get up here, shortly, it's going to take a while. I mean, this is a weekly chart. It's got to get through all these order blocks here. It's already violated the mean threshold of all these up close candles. It's already traded up to this volume imbalance right here, and we're looking to see if that'll act as support. Obviously, that's not the case right now. We have to wait for that to happen, probably going into tomorrow. And then once we get above that, treated as support, and the implied fair value gap. I'm not going to talk about that right here, but if you guys are familiar with that, you know what I'm talking about. It's not like you need to know it. But we need the support price all in these PD arrays, and then we'll take out the short-term high. And that's a market structure shift automatically on the weekly time frame. Once we take out the short-term high, that's a change in the state of delivery. So that means that this high right here is likely to have stops resting above it. And it's going to reach up in there, and it's going to take those out, and it's going to accumulate more long positions. And they're going to offset, I don't know how to say this, I might say it wrong, but they're offsetting their shorts that they used right here. And I'm probably wrong. Actually, I'm not even going to say it because I probably don't know what I'm talking about. I'd have to study a little bit more. But what's important is that you see that there's a civvy. So you notice how same thing right here that I talked about earlier happened right down here. There was no buy side offered. There was no. I'm not even bother saying that because I always say it wrong. I like to stick with what I know and just keep it that way. And once I get the hang of it, I can use the proper terminology because it's not something that anyone should be teaching. As long as I know what they're talking about, then go for it. But I just do the same things that I'm taught. So we have a civvy. So the buy side inefficiency and a sell side imbalance. It's imbalanced in sell side. So it needs to have buy side offered. There needs to be buying offered up here. And it's the opposite way. I think that's probably the best way to put it. So once we get up here, that's where we're going to be going after this. And then if we can have the acceleration, we'll get up here. And when I say relatively equal highs, that means that if you take the wicks away, like, and it's just like looking at these, it's just like there's just so much equal highs up here. I mean, they're not super equal, but there's liquidity up here. As long as we are able to get above these highs, that's where it's like, okay, we need to consider these levels because they're going to go up there and they're going to take those stops. And this is the stock market. And as long as we're bullish long term, these stocks are going to hit new equity highs. Like they're going to go to prices that they've never been before, because there's no trading up above the marketplace. Like, there's nothing up here. Like, there's no price action. It's not. I wouldn't say it's a void. I mean, I'm thinking that he might mention that. I'm just assuming that might be something, because he seems to talk about these things a lot, and it's like I can see why he would say that, and it makes so much sense to me. But I'm not going to comment and take credit for the fact that there may be a void up here, that there's no trading up here. It just seems logical to me. So I'm just going to leave it at that and keep my mouth shut, because I don't want to hurt anybody, and especially those of you that follow me, I don't want you getting hurt. So just stick to the basics. Stick to your 2022 model. Stick to the stuff that you know, and I'm sure you will do exceedingly well. So long term, my target is above this, and then it needs to show its hand a little bit more to get above here. So that's what I'm looking for. And then I'm going to move into E-mini S&P. So I don't even remember what I was talking about with E-mini S&P. Like, I don't even have to say it, I don't think. It's went up there. Like, it's taken out this high, it's filling this in, and there's actually a void up in here that it needs to fill in as well. On this contract month. Well, this is June, so let's not show that one. September contract, right here. Oh, where's it? Right here. Yep, September contract, right up here. That's your void. So, went and hit my mean threshold. Quarter block right here. Hit that. I took that candle, measured the fib, 50% right here. It's hit right through there, and that just tells me that we're going to take out the short-term high, and we're probably going to hit new equity highs and all-time highs with S&P. NASDAQ, beautiful. Show you the continuous chart. Right here. We're in this gap right here. I think we're going to probably fill that in tomorrow, because we haven't quite filled it in yet. Let's see here. Get these lines out of the way. They're just simple lines. Ignore this. This is probably the weekly. Oh, nope. That's something different. So there's a good weekly level to be watching for. That imbalance needs to be filled in. I expect that to be filled in here next week or the week after. If it doesn't, that would be odd. But that's what I'm looking for. And then let's see if it closed at consequent encroachment. Wow, that's that's amazing. Just shy of it. We have our new candle opening up right there. Consequent encroachment, and then we're looking for this high to get taken out, and ultimately filling this in my opinion. That's what I think it's going to do. And Dow Jones, obviously supporting. I love this stuff, like this wick measurements. You can measure the wicks, you get the quarter, flip this around. You guys can use, I know a lot of you have been watching, like, the how to roll credit spreads. So, ultimately speaking, in this environment, call credit spreads would probably be the worst thing that you could do. Call debit spreads would be the best thing that you could do for E-mini S&P. Like, if you were to use, I'll probably upload another video and talk about that, because that's really helpful to people that don't like theta decay. That's a good escape to that. So I'll be mindful of that and try to upload something like that. But if you were to use, if this is a weekly time frame PD array that I'm looking at, I've been talking about for like a couple weeks. If you were to do a call debit spread, I expect that within 2 to 3 months, I mean, I would not be surprised if it hits it 2 months, but getting up into this gap with the call debit spread would be a really profitable transaction in my opinion. But I'm not suggesting that you do that. That's just something I personally think that would help avoid the theta decay. It's just you don't get that super, juicy, delicious, like taking a bite out of a steak type of return, but it's for somebody that doesn't have a lot of money that just wants to grow their account. So I'm actually going to upload another video probably tomorrow or maybe tonight and discuss that, and I think that you guys will probably find that helpful. So I'm going to leave it at this. If you found this helpful, smash the like button for me. All of you, please, because I don't want you coming in here and be like, oh, I'm confused. Yeah, I don't know what this guy's talking about. Like, I want you to learn something. I want to help you grow and help you just escape the system and make lots of money. Not get rich. Not promise you get rich. Just build modern wealth so you can make your ends meet. Because that's a lot more important than being rich and buying Lamborghinis. It's not, Lamborghinis are stupid to buy. Buy a Corvette like ICT when you can. I like Corvettes. They're fun. Or like a Mustang. That's a good little tie. But make sure your ends are meet and your mortgage is paid and don't have any debt. And then go buy your car. And don't finance it because they'll just. I'm not even gonna say it. They're just jerks about it. So, yeah. So I'll leave it at that. Like I said, hit the like button if you found it helpful. If you didn't find it helpful, then just ask. I guess I don't know what to tell you. I mean, if you're there's no excuse to why you shouldn't find this helpful. Because the same thing he teaches, you just gotta work for it. You gotta work really hard and take the time out of your day to study this stuff, and you will find that you will be able to see these things before they happen. It took me a year. Actually, it took me 3 years to actually find a profitable trading model. When I first started, I built my account. I believe I've showed that before. I lost all kinds of money. I got into Bitcoin, got scammed by that. It's not worth it. So just take the time out of your day to study, demo trade, practice, just like baseball. Got to practice. Otherwise, you're not going to be able to throw the ball. You're not going to hit a strikeout. And you're not going to win. You got to practice. So I'm going to leave it at that. You guys have a wonderful day. Enjoy your weekend. I'll have another upload hopefully tomorrow. And I'm going to try and help you guys out the best I can and show you how to make income.